Welcome back to Be Rich. Today, the Business Standard has said that companies are finding it very difficult to meet the rising inflation. What they are saying is that prices of the commodities are rising faster than what they expected. The full price hike to the customers, and they are unable to protect their margins. So far, they have been protecting their margins by doing cost efficiencies and bringing out production efficiencies. Some consumer goods have become more costlier, but these costs do not reflect the full inflationary pressures faced by these companies. Even though the RBI is saying people are feeling very bad about the present and the hope for the future is far better, there seems to be more grim news coming from the market. Yesterday's Business Standard said Maruti sales are at a 6-year low. That is, you have got to go back to the year 2014-15 to see such poor numbers. This means consumers are not ready to take higher prices. It is not possible for companies like Maruti to pass on every price rise to the consumer. This is more so in cases of companies like Dabur and Hindustan Unilever, which are making goods that are consumed daily in smaller quantities. This is not a once in a lifetime purchase decision. Therefore, people are more careful. Hindustan Unilever and Dabur make goods which people buy day to day. So people cut back on any purchase which affects their budget. In India today, the pandemic has affected the middle class and the lower middle class badly. The only section that seems to have escaped completely unscathed is the people working in the information technology area. People working in information technology have had their salary fully raised back to normal and in most cases have had a major rise. If the company does not increase the wages, other companies are willing to take them. This is because the effect of stimulus has meant that developed countries are making more and more investments in IT infrastructure, and more IT engineers are required in India to service those large companies which are making those IT investments. In every other case, there has been a steep cut in salary and salaries have not been restored. In this situation, asking people to accept and the price rises and absorb them is a bit too much. But two companies have come out and said this is making life very difficult. Girish Wagh, the man behind the Tata Yes, who is now executive director at Tata Motors in charge of commercial vehicles, has now said it is difficult, almost impossible, to pass on all commodity price rise to the customer because any price rise is making the customer think twice about buying the product and it is affecting sales. So, Tata Motors is forced to absorb most of the commodity price inflation. According to Girish Wagh, if prices continue to increase so much, they will have no way but to resort to price hikes. These price hikes could mean lesser sales. Also, Hindustan Unilever's Rajesh Tiwari says that Hindustan Unilever will not be able to protect margins if commodity prices keep on increasing unless they increase prices in products such as shampoo, soap, toothpaste, which people use directly. Basically, what is happening is commodity price inflation is pushing companies which have big brands and who are making fat margins to become lean and mean, because if they increase prices, then consumers may not buy their brand and will buy a cheaper alternate. This is true in case of Hindustan Unilever, where cheap brands are available. Hindustan Unilever's Rajesh Tiwari says that they have little choice but to increase the prices and pass it on to the customer. However, the chief competitor for Hindustan Lever, that is Dabur, has said that such steep prices will make their goods unpalatable to the customer, and they believe they should absorb most of the costs and spare the consumer. If this happens, then what is going to happen is companies like Dabur will gain market share at the expense of Hindustan Unilever, and Hindustan Unilever will not like to lose market share to competition. The Reserve Bank of India, in its initial meeting, projected inflation at 5.1 for the entire year. Unfortunately for them, inflation has shot up to 6.3 and last month it came to 6.26. Even at the shop level, RBI expects the entire India year's inflation to be at 5.7. A consensus among economists in various places show that for the month of July, they expect prices to moderate to 5.7. This is at the consumer price level. But what they expect and more dangerously is when the wholesale price inflation is announced, they expect for the fourth month in a row they expect WPI to be more than 10% in double digits. This means companies are not able to pass on the full price rise to the consumer without suffering a loss in sale. So something has to give. Either that Reserve Bank cannot continue this easy monetary policy supporting growth at all costs as inflation is raging. For the first time in this MPC committee, there has not been a consensus. One member, Jayant Verma, has said that they cannot continue with this accommodative policy and that the RBI should make a statement to say it is going to fight inflation. This means that RBI will be forced to increase interest rates sooner than what it originally planned and forcing the reversal of this benign market cycle. Let us see what happens and where inflation ends. Let's wait and watch for this entire year. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.